We've got our market master of the day. Sridhar Sivaram is investment director at Enam Holdings, and he's joining us on the program from our studios. Sridhar, great to have you with us here.
Thanks for inviting me.
Greetings, and great that you could make it to the studio.
Yes, happy Diwali to everybody in the studio and also to all the viewers.
Thanks very much. So, how are things looking to you, Sridhar? I mean, is there a broader challenge, a slight challenge to the market from here on? Is it looking a little challenging?
It does. I mean, our view for 22 broadly had been and has been, it is also right now that 22 is a tough year. As it is looking, we may actually, even the first half of 23 also may be slightly tough. Not because of more of India reasons. More, I think the global challenges are still there. I mean, you got the UK inflation number at double digit, US inflation still at 8%. We have geopolitical tensions now, even with the China chip issue, which is, a lot of people are writing about, where US has sanctioned, a lot of trade-related issues may come up post the China elections. So we don't know how things are shaping up. Who thought a conservative UK pension fund will have a leverage? I mean, what all comes out, we don't know. And looks like these institutions never learn, even after 2007. So I think these are times to tread very carefully. India is looking good within the overall, emerging markets and developed markets. But does that mean that, we can escape some of the global shocks if they come? So that's how we are positioned. We are cautious, but we know that things are looking good as we enter 23, possibly for India at least. But how it shapes up, only time will tell.
Okay, well, for now, something very interesting in the market. Despite good numbers, a lot of stocks are selling off. So there's IndusInd Bank, there is Persistent Systems, there's Home First. Decent set of numbers from all fronts, but 3-4% losses is what you're seeing on the screen. So some profit taking perhaps. Sridhar, good morning. Happy Diwali to you, your team, your family.
Thank you very much.
You said tread carefully.
Yes.
What does this mean for an average investor who's watching you right now? Has the time come to take your money out, to sit on cash, or do you think that this will just be a painful time-wise correction and your portfolio may not see too much damage?
So I would say for a retail investor, the SIP, which I think the Indian mutual fund industry has done a great job of marketing. I mean, that's how you should be, because markets are volatile. So you just stay with an SIP, you get the benefit of, lows and ups of the market. As far as institutional investors are concerned, that's where all this, happens, where we try to position. So as far as we are concerned, we do have higher cash than what we have normally, knowing that we could get some opportunities as we go down, maybe in the next 1 or 2 months, or maybe in the first quarter of next year. And if we get interesting opportunities on the way, we would like to, use the cash and, buy for the next 3-4 years. India does look good. I mean, things are falling in place for India. But it doesn't mean that we can just buy anything without an eye on how the earnings is looking at. That's how I would say.
Hi, Sridhar. Thanks so much for coming down to the studio as well. As you said, sitting on some ammunition will be good, right?
Sure.
When the battlefield opens out, you have your money, you can allocate and buy the best stocks.
Yes.
What about IT? Now, I recall the last time we chatted, you were relatively underweight.
Yes.
And you pointed out that it's a myth that Indian rupee is weakening. You can't just say it's positive for IT companies. Has your view changed a little bit? We have had a lot of commentary that's come in there. And the street is split down the middle. Some believe that in the longer term it'll do well. But you don't believe the time has yet come?
So at least my personal view, it hasn't changed. I think the worst will come. So if you look at IT industry, the first half is normally much better than the second half. You normally hear terms like furloughs, holidays and stuff like that, which impacts the IT industry in the second half. We're already seeing slowdown as far as hiring is concerned, as far as IT industry is concerned. I think the worst for the IT industry will be possibly the third and the fourth quarter.
Okay.
Maybe stocks will bottom out then. To say that, all the negative news is priced in, as we are seeing even with this results, that good results are also not getting priced in. So we don't know. It depends on how the overall market is at that point of time. My feel is possibly the fourth quarter is when I would start re-looking at it, because I'll have more information. I'll have some sense on what's happening in terms of the demand. But if US is entering a recession, Europe is entering a recession, they're going to have a muted growth. And then you can, weigh your, pluses and minuses and see how it is positioned. At this stage, I haven't changed my mind. I would still be underweight.
Got it.
Is there an earnings challenge, Sridhar, for the overall market? I mean, FY24 earnings were at one point pegged at 1,000 rupees, and now it's closer to 900. And there are still downgrades coming as we go through this earnings season. What's your sense?
I think there is. I mean, it's now reasonably sure or clear that it's a K-shaped recovery. As we were discussing, some brokerages have put overweight on a premium bike company versus another. But that's what we are seeing on the ground, that anything which is premium, I mean, they're selling like no tomorrow, even from a footwear to, a retail mall, which is on a high street versus, somebody who's in a B or a C town. We are seeing a stark difference in terms of, the spending power. So obviously, we are going to see this where some companies will do much better. A larger part of the market is, addressing the masses, which will have a challenge. So I would say export-facing companies will have some challenge because demand will be slow. So I think there's a lot of uncertainties. I think earnings will be down. But having said that, there are enough pockets where you're seeing, as I mentioned, if there's a K-shaped recovery, there's a whole upper part of the K where there is enough opportunities and more. So that's how we are trying to position our portfolio. It is challenging, but I think there are opportunities. That's how I'll put it.
What about Telecom? The data has been pretty good. I mean, Reliance Jio, in fact, has added the most number of subscribers for the 5th month in a row. Bharti has been doing really well. Is this a space that you see more opportunity?
So we are very bullish on Telecom. So if you go back, I would say 5 years, the industry revenues were about 2 lakh crores. After 5 years, we have come back. We went to almost 1,50,000 crore industry revenue. We're back to almost 2 lakh crores again. And we think that the ARPU benefits from here straight goes into EBITDA and profitability. And we are just 2.5 industry players now. I think this segment looks very interesting. I mean, 170 rupees ARPU, they are absurd because the amount of data usage from what we are getting today to what we were, say, 5 years back, all sorts of freebies thrown in. I think easily you can see a 200 odd ARPU or even higher over a period of time, and that benefits the EBITDA straight away. So I would say that, I mean, that's the segment we are very bullish on.
Is data mass or premium? I'm just wondering.
No, data is mass. Data is very much mass. So, I mean, at the pricing that
will you have pricing power there? Which is the bet?
So the question is that today, telecom has become part of roti kapda makan.
Correct.
It is an essential. It is not a discretionary anymore. So if there is a discretion between a shampoo and a data pack, or a soap versus a data pack, I think the Indian retailer is very clear, the individual at, say, even a remote village, that it is data over shampoo or soaps. So to that extent, this is part of essential. So what we are talking of is an increase in ARPU of, say, 50 rupees or 30 rupees a month. And even that, the industry has struggled for 5 years. But I think industry struggled because there was a new player and he wanted market share.
Yeah.
But as sanity prevails, we will see that ARPUs can easily go up from here, and that benefits the industry. I mean, that's our call. Time will tell whether we are right or wrong. That's how we have positioned ourselves.
Sridhar, I as well listened to Sonia's updates on all these two-wheelers and the auto space. For me personally, it's been very difficult to sell any Royal Enfield vehicle that I've owned. The 350cc, the 500cc, I came this morning on the 650cc. That's
why are you selling them? I'm part of the same gang. I ride them. I'm so happy with them.
Sridhar, for me, affordability becomes an issue. Right? I can't keep all of them. I need to pick and choose. So just go up on the CC and hold on to that one. But that aside, what about the auto space? How much of the good news is already in the price? And which pocket of the auto segment do you still believe there is value? Two-wheelers, there is some bit of struggle, I think so, on ground. When you talk to Bajaj Auto, whenever the management joins in. But CV, people are very, very bullish. What's your take?
Yeah, so very similar to that. I think there is, the EV-related threat is more to the two-wheeler, especially at the entry level or slightly at the mid-level of the two-wheelers. We're also seeing a lot of these, electric, I would say not moped, but not scooter, somewhere in between, all over Bandra. I understand it's all over, Bangalore and Delhi also, which people are using. Which mostly the delivery boys are using today. But whatever it is disrupting some usage in some form or the other. I think the two-wheeler space is poised for EV disruption to start with.
Yes.
So that, I think, just the threat that it could get disrupted, their valuations do come down.
Okay.
But as far as CVs are concerned, we think as the economy is recovering, we track a lot of toll data of toll companies which are listed. They're showing very encouraging toll numbers, which is suggesting that the traffic movement is very strong. So we think that the CV cycle is poised for very interesting growth from here on. Passenger vehicle also is looking good because there is a premiumization angle there which is doing well. So that's how I'll be placed as far as auto is concerned.
You know, talking about EVs, right? The global headline is, of course, Tesla's numbers that they posted. The numbers were not too great, but they've guided for a 50% growth in this calendar year.
Yes.
Of course, it's in the passenger vehicle EV space, but I take your point about two-wheeler EVs that could sort of blow out going forward. But one final word, since it is Diwali.
So EVs are blowing out, I think.
They shouldn't be used together. I said blow out, I didn't say blow up. But take that point. It's Diwali, and every Diwali, of course, it's the typical question that we ask people who join in. What's your Diwali pick?
So Sonia, there's no Diwali pick. It's not like a day and I suddenly decide, okay, this is what I want. But if you ask me, one pick or one sector, I mean, this is what I said even last time when I was here 2 months back, that the financial packs look extremely good. I mean, banks, just buy any of the large banks who have an ability to raise CASA, and you can just sit on them for 3 years. The outlook is looking so good. Look at the credit cost. Even when you speak to them, they'll tell you that the credit cost, what they are, penciling in when they are, building in the risk models, the actual numbers are, at least 20-30% lower than that. Initial phase of rate hike cycle, the banks tend to benefit because assets gets repriced before the liabilities. Even there, if you see 190 basis points of rate hike, banks have hardly increased 50-60 basis points as far as liability is concerned. Whichever way I see, I mean, the stars are aligned. You don't need to, pick and choose, or you don't need to time them. Just stay put, just stay invested in financials or a financial-oriented mutual fund, or buy whatever you can. I think things are looking very good for the next 3 years.
Just a slightly contrarian view. I spoke with Kenneth and Rade recently, who doesn't own any financials. But having said that, his point of view is that are we, because the mass segment is hurting a little bit, is not doing very well, right? Who are banks lending to? I mean, where is all this credit growth coming from? The premium end, the rich, so maybe there is some borrowing, but bulk of the borrowing, the need is at the lower end, right? So for banks, does it raise sort of quality issues down the road, not now, maybe 6 months down the line?
So I think, when you ask me this question, I'll be very cautious on the MFI segment, which is really at the bottom of the pyramid and which is totally unsecured, where I take your point. At the slightly middle and upper middle, there seems to be there is enough, buoyancy happening there. I mean, that's showing up in the numbers. Even I was skeptical, say, 2 months back, because things were even worse 2 months back, so or 2 quarters back. And look at the numbers, how they are playing out. So that's how I would say that there is some merit to the fact that there is some buoyancy in the economy, which is showing up in the middle level.